Okay, as rates on the fixed side of things move up, a question that I see going on a lot these days is how long can you lock in a pre-approval rate for? So if I get a pre-approval and get quoted a bunch of rates, typically that'd be fixed rates, which, as you know from our previous videos, we don't normally advise clients to take them. But if you were taking a fixed rate, how long do you lock a fixed rate in for? It's important to know that actually we don't lock in rates all that often. First of all, when you lock in a rate, it doesn't mean that you've been approved. It means that your rate is locked. And if you go and purchase a property that perhaps the lender doesn't like the security, the property has a problem, or some reason why they won't lend on it, or they don't, or something changed in your situation, that rate may be a moot point. And most rate holds are exactly that. Even though you've held the rate, they haven't actually unwritten the file, so it doesn't mean you're guaranteed that rate. So that's a huge, huge thing why I'm very leery about locking in rates. Secondly, a rate that you lock in for 120 days is never as good as a 30-day quick close. So a 120-day rate, which is how long you're locking, is not as cheap as a 30-day quick close. The lowest fixed rates for that matter, and even some variable rates, are always a 30-day quick close. So any rate that you lock in will not be as good as what you get 30 days before closing. Now, a point on this that might be also interesting for people to know is that a lender just give me the lowest rate when they go to close. The truth is that we actually have to manually request and sometimes even pay ourselves to make sure the client gets the lowest rate or else move them from lender to lender. Many lenders only allow you to drop the rate one time. So if you're getting a mortgage through a bank or something like that, they definitely do not have the discretion to drop the rate in most cases, even if rates have went down. So you get a 120-day rate hold, but a 30-day rate is cheaper. You could very well be in a position where you actually pay a higher rate. So you can lock a rate for 120 days, but the better scenario is A, go variable, which very rarely has the 120-day time frame that's necessary, but sometimes we do that. Two would be to do a strategy where we lock a rate over 120 days and we reset the rate every 30 days if we were doing a fixed rate. That'd be the scenario that we would do, and that'd be the best way to go about things. But also to keep very much in mind that you want to make sure that you don't just have a pre-approval, you have an underwritten approval, or else you're going to find that even though you have a rate locked, you're far from guaranteed on that in the meantime. So you might think you have a rate, but you actually have no rate whatsoever. Anyway, for more tips, please do follow our page, subscribe to our videos. We would love to help you with anything. And please share us with your friends. We'd love to give them mortgage help. And if we can give you personal mortgage help, please reach out to our contact information. We'd love to help you with any of your mortgage needs and or any questions that you might have.